All right, guys, welcome back to the channel. Apologies about the voice. I've got a life update. I'll leave that till the end of the video, but right now we've got to look at some Bitcoin speculators getting massively long at this stage in the market, what that could potentially mean, and of course, my own analysis when it comes to the price ranges and price targets for Bitcoin to flip from where we are into something a little more robust into that bullish sense. I've obviously got to get through the S&P 500. We had the week close out on Friday, also the NASDAQ, and some longer term data for 2024. When we take a look at the overall cycle, let's dive into this piece. Pay very close attention to this. I reckon this is going to be something pretty massive over the next couple of years, which for you guys that are following the channel, if you're not, thanks for dropping by. Make sure you do hit the subscribe. This is our 18.6 year cycle. Several other YouTube channels have made mention to it. One in particular is Elio Trades. So if you don't follow, go and check his stuff out as well. So he's been following this from our channel, looking at the end of the cycle. Still a big bull market to go into 2025, 2026 for real estate and the economy. The stock market may go a little longer. Bitcoin may go a little shorter. We haven't done a full 18-year cycle for Bitcoin yet. Remember, Bitcoin did start end of 2009. And this cycle began, the new cycle anyway, around 2011, 2012. So there's going to be some interesting times over the next couple of years as we lead into this peak. Major bull run. I've talked about it being the everything cycle. The everything bull market, the everything bubble. Things are going up for these next year or two, depending on which asset we are looking at. But before I get too sidetracked, this is pretty massive when it comes to money flowing into the market. Around 16 trillion. 16 trillion. What's the US debt? It's about double that, maybe about 34 or so trillion. But this is just 16 trillion in free equity is available in the US markets. If Freddie Mac's proposal frees up just a tad of this pool of money, it is stimulative. So the blue line is mortgaged homeowner value. So real estate value in the US, sitting at about 36 trillion. Mortgage debt outstanding is the black line here, about 20 trillion. Therefore, the free equity is about 16 trillion. The stock market has been up again. So we got 3 green weeks now, 2 up weeks and 1 inside week because you had a lower high and a higher low. All still pretty positive. We've looked at this being 3 red weeks. So the possibility of a rally and then another correction. At this stage now, it seems more unlikely that we'd see a mega crash from here. You can see back in August, September, that there was the 3 red weeks down. There was a pretty decent rally, and then it took another several weeks to find that low in October. That's one option. It didn't necessarily go that much lower, 5% low to low, so the exact low point to the next exact low point. It'll feel, if that did happen, of course, it's going to feel like the markets are coming crashing down, and that was the top. Everyone missed out, and show's over. I doubt that's going to happen based on what I just showed you here without going too much into detail again, repeating myself. But the end of the cycle has still got a little bit of time to go, as we can see with the amount of money on the sidelines here, just in one example. So that's one example I think that could happen over the coming weeks. But the other example that could happen is something like 2020, where you had the 3 red weeks down, the rally, and then the higher low form, and then the market basically took off again. You had a huge move out of the COVID crash. Similar signal here, so forget the fundamental event that happened there. This is the important part when it comes to understanding the technicals on a chart as opposed to reviewing the fundamentals of a particular period and trying to say, well, that was that fundamental and that fundamental is not happening right now, so therefore it can't happen. Forget about that. Just look at the technicals. That's going to keep you on the right side of the market. You got a high low here and then market took off. So there's a couple of scenarios here. If it's the worst, it doesn't seem, at least in my opinion, I don't think a 5% from low to low is that bad. And in this case, well, you got a higher low and then the market sort of moves on from that point. You got to weather out the storm, of course, and that takes weeks. And a lot of people in the market think day to day is basically the start of another collapse if you get a down day, or the start of another mega pump that everyone missed out on the lows when you get an up day. So the S&P is looking pretty good. NASDAQ, same sort of thing here. It's moved past its 50% level. Had a couple of weeks closes up here, but the volume is dropping off. You can see the volume drop off. More in particular, last week's volume is quite low compared to anything we've seen previously. So it might need to come back and test some of these prices, gather up that momentum again, and start to move its way higher. Still got a bit of time in the bank here from what happened in the past. You can see the fall from the tops took about 18 weeks to get back to the top. And if we look at half of that half of that time, 9 weeks takes us out to next week. So this week and next week, if we did half that time to get to a new all-time high, it'd still be pretty damn fast to get to that new high price. So the stock market's looking relatively healthy after last week's close. I've looked through the international markets as well. I mean, UK bursting to new all-time highs, Germany bursting to new all-time highs again, France, new all-time high again. This is wild. You know, markets are correcting, putting in higher lows, consolidating, and then pushing to new highs. Every time this happens, you've got that wall of worry. People are getting fearful of, what did they fear last week or the week before? It was something to do with inflation or interest rates or CPI data or you name it. Someone's going to let me know in the comments section for sure that there's some other economic thing that's different this time than it was last time, and you better watch out for it because it's going to crash the market. Like, you know, we've heard this so often, and I've heard it for many, many, many years over and over again, and the market just keeps going up from that point. When things get really bubbly at the top, that's when you got to be worried. Not worried when things are looking bad, because it's typically around some sort of lows, as I'll get to with Bitcoin in just a moment. Now, Bitcoin data here. BTC, commercial hedges, net position. The green in the background here is when the commercials are net long, and the white is when they're not net long, obviously. So this is going back to 2023. Looking at the smart money buying BTC, we've just seen another one happen right here. So although this isn't my TA using my Gann swing analysis, looking at my 50% levels, I think this has got some merit to it, where you can see that they've gotten long when the trend has begun or just before the trend has begun. So they're sort of waiting back here for the consolidation to break out. What it looks like here is they were waiting, they got the breakout, and then waiting for it to break again. Didn't happen, so they got out. Then you had another test here, didn't happen. They got out and waited for the breakout. So the way I'm reading this, obviously you do you, but the way I'm reading this is that they're potentially waiting here, thinking that that may have been a bottom and waiting for that breakout now because you've had that bounce, or they're in a little bit too early like last time and we have to wait it out, another test, and wait for that move higher to confirm the breakout. Either way, that's an up-down scenario. Obviously, no one knows what's going to happen on the right-hand side of the chart, but it seems like a relatively okay time for that accumulation to occur because of where we sit overall, looking at the potential possibility of that breakout happening next. And should that breakout happen, well, then you probably want to be on the right side of the market. And in that case, if the breakout's to the upside, there you go. Upside is the right side to be on. And to the downside, it seems relatively limited at this time. We'll have a look at on our chart now. Looking at BTC, it's at 61,500. That low that came in at 56,500 down to the previous lows at 52, 53 takes you about a 7% loss down to about a 10% loss. So basically just looking at the low to the next key support level, roughly 7 to 10%, take it down to the 50% level of the entire move here for the September move, that is, takes you down to a loss of about 13%, which would also be the top back in January, the ETF top. So if you can put into your portfolios or put into your own plan that there is a possibility of something like a 7 to 13% loss from that low, not necessarily worst case scenario, but probably one of the worst case scenarios, and then you can layer in on top of that, then you're probably not doing too bad. Talk about father stuff another time. My voice is gone, but I appreciate your support. That's smash up the likes, even if it is for my 2-year-old. Don't have a name yet, and I'll let you know when I get the name for our baby as well. Let's go, 4,000 likes. I'll see you guys at the next video. Until then, take care and peace out.